Hello, I'm Adam Grimes. This video was first published on my blog, adamhgrimes.com. So if you found it someplace else, and if you like the ideas that I'm looking at here, you might want to check out my blog for hopefully a little bit more of the same. First of all, here's the S&P 500, which is in a very large, broad consolidation. And depending how you measure things, it's obvious since midsummer the market has been relatively flat. We also should take a look at the Russell 2000. And the Russell 2000 arguably has been in a large trading range since the beginning of this year. Now, there's a lot of talk about the relative weakness in small caps. This is something I've written about on my blog. You typically see small caps lead in a strong bull market, and we're not seeing that. Well, the market's consolidating, so it's really not necessarily much information. Let's do look. Apple is a market-leading stock, and if you look in the upper right corner, you'll see Apple. When these dots are the trailing stops from our equity trading model that I use in my research for Waverly Advisors. You might also want to check that out. And you see Apple is strong, is certainly overextended. If you look at the weekly chart, the upper Keltner channel, market's been above that for many weeks, and this is a point from which we could reasonably expect to see a pullback, perhaps into the low 90s, high 80s even. That does nothing really to violate this longer term trend integrity, but it is interesting to see market leaders, and also Alcoa is a very different kind of stock, but another leader. Interesting to see so many of the leaders, despite the broad market listlessness, so many leaders hold on to strength. So that is a positive. One group that we're watching very closely are airlines. And airlines have been more or less what has held industrials together. And industrials as a group are leaders which are in danger of losing their leadership. Now again, we're in a very broad consolidation, so I would not put too much significance on that. It's natural to see sector rotation, but we are at a critical inflection point for this stock, and if we looked at a number of other airlines, we would see similar patterns, and potentially for the industry, which could then carry through to the sector, and that could have some short to intermediate term broad market implications. But Delta is in a monthly bull flag, which is very clear. I'm sorry, a weekly bull flag. I misspoke, which is very clear from the weekly chart, and has the potential to turn up out of that flag. And we could do things like enter a break above the trend line, which would be above last week's high 39s or so. And what we would not want to see is a lot more weakness. We'd not want to see Delta down below 35. That would be very bad for this pattern. Let's look on the short side too. There are a number of opportunities on the short side, and banks, many of the big banks, JP Morgan, Goldman Sachs, have recovered from what were very bearish patterns a few weeks ago. We do, however, have some banks that are a little more bearish than others, and Wells Fargo and Bank of America are two that are showing distinctly bearish patterns. Bank of America in particular is well set up to the downside. We could look to enter shorts below, say, the low 15s. There's no exact level. You could do things like enter with momentum on the daily chart with a stop. You could probably get away with a stop in the low 16s or so. Wells Fargo, perhaps not as clean of a pattern. Similar trade, though. You look to enter somewhere below high 51s. Your stop here might give it a little bit more room up around 53. And these are just ideas. And of course, you have to adapt these. You have to put these in context of what you think about the sector, and also for the broad market. But it is interesting to see a number of short trades here. CocaCola, a lot of longer term positive. However, it looks like we are in an earnings drift is a real thing. After a price shock driven by earnings, it is normal to see a market consolidate and then drift down a little bit, which looks like what is underway in Coke. I would be a little bit careful with that. Still a longer term bullish pattern, and as you can see from the chart, not a particularly clean trading stock, but bears are in control there right now. Two more shorts. Blackberry, we mentioned this in my research yesterday. Had a short entry based on this daily consolidation, and you know, patterns are not always clear, but if you think structurally what is happening, that's kind of an ugly mark on the chart, I apologize. You had a large downward price shock and then some type of consolidation. Call it what you will, flag, perhaps an anti-pattern, and then a little bit of a turn down, which you can see the MACD has hooked down, and you can also see the price structure. Appropriate spot for short, and I would be on guard also for Twitter. The daily chart is not particularly inspiring. The weekly chart, which I'll expand a little bit, is showing some signs of a further breakdown, and you could look to enter shorts somewhere in the low 36, and probably need stops up a little bit above 40, 42-ish, and you could at least be playing for all-time lows on that short. So, I know we've talked about a lot of shorts. The bottom line is the market overall is in a very healthy technical situation. However, in context of this longer-term bull market, we could easily see a, say, 15% pullback, which for longer term investors is a bump in the road, nothing to really pay attention to. If you're a longer term investor, you need to think about how you handle the psychology of that. If you're a shorter term investor, there's probably opportunities for a little bit of play to the downside, so something to keep an eye on. So that's all I have today, and like I said, if this is interesting to you, check out my blog, adamhgrimes.com. Thank you very much.